Hello and welcome to the third topic on current liabilities. Now we're going to take a look at salaries and wages payable. Most companies pay wages every 2 weeks. The wages have to be recorded, and depending on what the month end is or year end is, you may have accrual journal entries. Let's work with this example and see how we would do the journal entries. Here we are told that during the month of March, Monster Company's employees earned a total of $64,000. Withholdings related to these wages were $48.96 for FICA, $7,500 for federal income tax, $3,100 for state income tax, and $400 for union dues. The company also incurred no cost related to these earnings for federal unemployment tax, but incurred $700 for state unemployment tax. So let's look at all of this information again and see what it means. The employees have earned a total of $64,000. So let's start out with the easy part of this, which is we write the date and we write down salaries and wages expense, and they have earned $64,000. Is the employer going to write out a check for $64,000? Well, not exactly, because we have these withholdings. The employee has agreed that to have the employer withhold these taxes, these amounts, and send it to the relevant authorities, whoever they may be. So let's see who these relevant authorities are and why these amounts are being withheld. So the first is $4,896 have been withheld. This amount is not going to be paid to the employee. It's going to be paid to someone else. Who is that someone else? This is FICA. FICA is basically your Social Security and Medicare taxes. The employer and the employee have to pay the FICA taxes. So this is the employee's portion that is being withheld by the employer, and the employer is going to send it to the respective authorities, Social Security and Medicare authorities. For the employees, they have withheld $7,500 in federal income taxes. So another $7,500 is withheld, and this withholding is federal income tax withholding. So these two checks have to be sent out. These amounts have to be sent out now to the various government agencies. Then there's another $3,100 being withheld as state income tax. So this amount is also not being paid to the employee. This money will be sent to the state government on behalf of the employees. This is the state taxes. And $400 in union dues. So they are members of a union, and the amount is being deducted from the paycheck. When it's deducted from the paycheck, the employer is not going to keep the money. They have to give it to the union. So they have to remit it to them. So when you see these word withholdings, it means the company is holding it for a very short period of time, and they're going to send the money over to various agencies. FICA is Social Security and Medicare taxes. Federal income taxes is the taxes that you as the employee has to pay. Instead of waiting until the end of the year or this, April 15th to make those payments, we have it taken out of our paycheck every time, and that's what this amount is. Similarly, we have state income tax from our paycheck and the union dues. So finally, we come up with a net number, which is the 64,000 minus all these withholdings is 48,104. This is the amount that is going to be paid out to the employees. But here they've told us that the amounts are going to be paid in April. Assume that wages earned in March will be paid in April. So right now, this is also a liability, salaries and wages payable. But this is the amount that's going to be written out by way of a check to the employees. So when you get this check for this amount, let's say this was just one individual. If your check is this amount, the employer has actually paid you 64, but these other withholdings have been done on your behalf at your request to be sent to various people. Okay, now they also tell us that we have unemployment tax of 700. Unemployment tax is always paid only by the employer, not the employee. That's not something we pay out of our individual paycheck as employees. This has to be paid by the employer. So this money is going to be paid out by the employer, the unemployment tax. And recall I told you, this amount, that is the FICA, this Social Security and Medicare taxes, the employer and the employee pay the same amount. an equal amount. So this is an additional expense for the employer over and above the 64,000, and they have to pay unemployment tax of $700. These two numbers represent their payroll tax. So for the employer, relating to this pay period, their total expense, their payroll expenses are the salaries and wages expense plus the payroll tax expense. Okay, so in this case, they've told us we're not paying any federal unemployment tax. So there could be a federal unemployment tax as well. And let me put that in black over here if we had it. In this case, they're telling us that the company doesn't have to pay that tax. They're paying only this tax. They're not paying the federal unemployment tax. It could be a case that they have a credit for it, or they have exceeded the limit on which they have to pay the amount, etc. And what is this unemployment tax? This is the tax from which they pay out unemployment insurance when someone who was working loses their job. And that's something that in the current economy has become a big issue, where companies are laying off a lot of people simply because of the way the economy is, and because of the lockdown, they can't have people come and work for them. So these unemployment taxes come from these, help contribute, they contribute to the coffers for states to pay out unemployment insurance when someone gets out of work. The point once again over here is these are all current liabilities. All of these are current liabilities. So how long does the employer have to make these payments? For wages, it's typically 2 weeks. Within 2 weeks, those payments are made. As soon as someone works for 2 weeks, the payment has to be made. So it could be a matter of a day or two when these checks have to be written out. The monies that goes to these various agencies, most companies will remit the money within 1 to 3 months, depending on what the agreement is with each of those agencies. So this is a quick example of salaries and wages payable, which is a very important expense. I want to make sure as an employee, when I work for a company, that I am going to get my paycheck on time. So I need to know what these liabilities are, because these liabilities have to be met. Otherwise, there are going to be dire consequences for the company's short-term survival, forget the long-term survival. So this ends this example of salaries and wages payable.